welcome and thanks for joining this week's market update. Today coming to you from the financial capital of the world here in New York City. And took the time here to record this update here in the heart of the financial center of the world, because obviously we're all entangled in the markets, in the economy, in everyday economic life. And the events that transpired last month across capital markets indicated something really unique, something that we've touched on over the past couple of months, and that's this broadening of depth of economic activity. What we saw last month was a very healthy sign of the depth of individual equity where we're actually gaining value moved away, at least marginally, from those top-heavy components of the S&P 500 and broadened into that average stock in the S&P 500. This is healthy for a couple of reasons, but mainly because as we look at diversification, as we look at risk management, and as we look at the decisions that the Investment Policy Committee has put in place over the past 12 months, all those have panned out in a way that supports the notion of appropriate risk management and a diversified approach to capital markets. As we look at last month's update, and as we see the economic data that was released here over the past 4 weeks, what we know now is that jobless claims continue to drop even lower. We talked about this softening idea of the labor market, yet it's also a sobering fact that we should never assume we know every aspect of what's likely to occur in the markets or even in the economy. The data is starting to prove that once more. And it kind of reminds me of the uncertainty and the unknowns that came out of the COVID cycle during the economic releases back then. What we also know over the past 4 weeks is that ISM services, kind of the service sector of the economy, grew for the 9th consecutive month in a row. None of that is obviously to suggest that it's going to continue perpetually. However, we can make an assessment that in 2026, the ability to remain diversified and appropriately manage risk in a very, very thoughtful and intentional way, that's exactly how we're going to approach capital markets and overall portfolio allocations. At the end of the day, the message that I've often given is quite simple, and I stick to it, which is focus on what you can and cannot control. Components that you can control on the equity market participation front, on the savings front, on being on a prudent investor and prudent consumer front, those are all components that have a direct tie to your long-term success as an investor, as a consumer. With that in mind, cheers to a great 2026, happy holidays and Merry Christmas, and we look forward to servicing you and your households in perpetuity throughout the years.